Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Hope you're all having a fantastic week and enjoying all of these, uh, what has been mostly a pretty crazy stretch of some big moves, right? Again, seeing it today, and we have a really big lineup after the close, so hoping that it continues that way. Um, as much as we're seeing some big action during the day, not everything goes exactly the way you want, right? 3M is a great example of this. Um, so coming into the week, 3M definitely on the radar because I thought it set up kind of interestingly from an option perspective. Okay, not necessarily an option pricing perspective. Excuse me. So not necessarily from like a technical perspective. It was you know, technically, it was, kind of indicating that there could be some room, but it was more so about the option pricing. And what I mean by that is they were looking for, so first off, they were looking for about like a 7.5 point move. That's just about what the straddle was pricing in the weekly July 26th straddle. And over the course of like the past year, particularly in April, where it dropped 30, 3M had just been a really consistent mover. I mean, good or bad, just put the lines up so you can see. So good or bad, just really consistent in the sense that it moved, right, which is good, and it moved sharply, which is great, right. So as opposed to like some names, which maybe they'll take like a quarter off and not do a whole lot. You can see that 3M very consistently moved, and it had very consistent large moves, right? So coming into the week when the straddle was only priced in at about 7.5 points, it just seemed a little unusual because it's coming off a quarter where it moved 30. It had been averaging, I believe, over like a 10 point move. Actually, I believe it was closer to like in the low teens, actually. So I've been over averaging like a 10 to a 14 point move over the last year and a half to 2 years. But for whatever reason, the options were pricing in only 7.5 points, right? So it wasn't necessarily that it was in like a tight technical consolidation or was bumping up into support or resistance, right? It was more so that the options appeared to be pricing in a move well underneath what this had averaged over the last year and a half, and especially when you compare it to what it did in April when it moved 30, right? So the idea of the strangle was to look for a move kind of in line with that historical average, right? So like 10 to 15 points, and it was it wasn't really set up to favor one way or the other. It was basically just looking for a sharp move, either up or down. So this morning, it gapped up. It was about 8 points, right? It hit the 100-day. It was about 8 points, and so it didn't quite get to like that 10 point move. And what also you'll realize too, in the 5 minute chart, is that it basically like the high of the day was essentially the open, and it dropped immediately below 185. So when I've done like these when I've broken down these trades before, and we've spoken about this in some option sessions recently, is I like to give these things like a few minutes off the open, just because the books can fill out. Spreads can often be pretty wide, especially on a name that just reported. As the stock is trying to find its trading range, I mean the options will be a little bit wider. Um, so I like to give them like a few minutes off the open, so like 5, 10, 15 minutes, and respecting those rules. If you'd given it like 10 minutes off the open, it already would have been down below 185. So that even less so. I mean, that's only like a 5 to 5.5 point move, right? So you're at the point where not only was it not in the target range, but then the call spread portion of the strangle wouldn't even been in the money. So as much as you may have wanted to like close out at the high of the day, I mean it was just kind of unrealistic, right? Because it didn't hit that 10 point target, nor did it really give you an opportunity, after like the books had started to fill out during like the first 30 minutes, right? So unfortunately, as you can see, it rolled over, and now it's back in the kind of hanging around the unchanged mark. And what I like to do is give these a couple days. If it's a strangle or bet that maybe doesn't move right away. I like to give it like a couple days to see if it finds direction. So like 2 to 3 days after the event to see, maybe the first day not so much, but then the news digests and people start to take a position. So maybe you get a couple day run, couple day drop, right? Um, so that's kind of how I manage these things after they don't move, right? So, you can have like a great idea, have a great game plan, but it obviously doesn't always work according to how you draw it up, right? It doesn't always go according to plan. So you kind of have to just manage it in the aftermath, right? And this is just how you do it. So now you're kind of waiting to see if there's some follow through lower, maybe to like the low 70s, or maybe it rebounds and makes like another run. But then we'll have to make a judgment call next week and figure out how to approach the position going forward. All right. So if you have any questions just about trade management, how we go over like these spreads or these strangles, straddles, um, that's fine. Reach out. Love to hear from you. Um, Lots to look forward to. In addition to kind of like a crazy week of earnings coming up next week, we also have the Fed next week, and that could be a really seriously wild event. Kind of setting up for a busy stretch. So, ton to going on, ton to look forward to. Should be some good action. So, um, definitely excited for that. All right. So, have a wonderful night, and I'll talk to you guys all tomorrow.